Invented in Japan, Renko charts ignore time and focus solely on price changes that meet a minimum requirement. In this regard, these charts are quite similar to point and figure charts. Instead of X columns and O columns, Renko charts use price bricks that represent a fixed price move. These bricks are sometimes referred to as blocks or boxes. They move up or down in 45-degree lines with one brick per vertical column. Bricks for upward price movements are hollow, while bricks for falling price movements are filled with a solid color, typically black. Renko charts are based on bricks with a fixed value that filters out smaller price movements. A regular bar, line or candlestick chart has a uniform date axis with equally spaced days, weeks and months. This is because there is one data point per day or week. Renko charts ignore the time aspect and only focus on price changes. If the brick value is set at 10 points, a move of 10 points or more is required to draw another brick. Price movements less than 10 points would be ignored and the Renko chart would remain unchanged. Using the S&P 500 10-point Renko chart as an example, a new Renko brick would not be drawn if the S&P 500 were at 1840 and advanced 9 points to 1849. If the S&P 500 then advanced to 1850 the very next day, a new Renko brick would be drawn because the entire move was at least 10 points. This brick would extend from 1840 to 1850 and be hollow, or white in this example. Alternatively, if the S&P 500 declined from 1840 to 1830, a new Renko brick would be drawn and it would be solid, or black in this example. The two charts above cover a 6-month time frame, but the Renko chart sports an irregular date axis and the price action is less choppy. This is because the S&P 500 Renko chart ignores price moves that are less than 10 points and remains unchanged until there is a move of at least 10 points. Renko charts can be based on closing prices or the high-low range. Closing price means there is one data point per period and less volatility. The high-low range puts two data points into play and increases the fluctuations, which results in added bricks. The examples on the screen show Renko charts for the S&P 500 and the box size is set at 10 points for both. The first chart is based on closing prices and the second is based on the high-low range. Chartists can use the box settings to set brick size as a specific value or as the average true range, ATR. A specific point value means brick size will remain constant even as new data is incorporated into the chart. In other words, new price data is added every trading day and the brick size will remain constant. The two charts on the screen have a fixed value and each brick represents 10 points. In contrast to fixed price bricks, using ATR values results in the fluctuating brick sizes. The default ATR is based on 14 periods and the average true range fluctuates over time. The brick size is based on the ATR value at the time the chart is created. Should the ATR value change the next day, then this new ATR value will be used to set the brick size. Also note that ATR values are based on standard charts, such as close only, bar and candlestick. These charts have one data point per period and a uniform x-axis, date axis. The ATR value shown on these charts can differ from the ATR brick value on a Renko chart due to rounding issues. The examples on the screen show how the ATR value changes when the ending chart date changes. The first chart ends on June 10th and the ATR value is 12.05, which is the value for each Renko brick. The second chart ends on April 15th and the ATR value is 20.55, which is the value for each Renko brick. Notice how the brick value changed as the ATR value changed. The bricks on April 15th have a much higher value than the bricks on June 10th. White bricks form when prices rise a certain amount and black bricks form when prices decline a certain amount. The image on the screen shows a daily S&P 500 chart with 10-point bricks and a 10-period simple moving average. Note that a 10-period moving average calculation is based on the last 10 Renko values, not the last 10 trading days. An indicator on a Renko chart is based on Renko values and will differ from the same indicator on a bar chart. Chartists can typically use shorter moving averages on Renko charts because smaller price movements have been filtered out. Chartists can use troughs to mark support levels and peaks to mark resistance levels. Chartists can also look for a 2-brick reversal to signal a trend change. Notice how the index fell with 5 black bricks in August and again in September to October. These declines looked like falling flags. A reversal occurred when 2 white bricks formed and broke above the short-term resistance level. Chartists can also apply the Fibonacci retracements tool to Renko charts.